Today to announce that the Justice Department has secured felony guilty pleas from the world's largest cryptocurrency exchange, Binance.
Actually, it's Binance.
Binance.
Binance. Largest virtual.
Binance.
Binance. And let me be clear. It's Binance.
Binance.
Binance. Council has discussed crypto regulations and legislations at length, and we have come to the conclusion that instead of regulating, we are going to ape a fat bag each into laptop and pump it to over $1,300,000,000,000,000,000,000,000 market cap. Let's fucking go, crackheads.
Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I got my coffee locked and loaded, ready to go, because we have to talk about Bitcoin. Bitcoin bottoms, Jane Street manipulation, and AI layoffs. That is what we have in the spotlight for today. We are looking at a Bitcoin chart that has stabilized. We are looking at prices that have slightly come up again. We are sitting at 67,736 at this moment. And we really see that somehow a consolidation at this level has taken place. A little bounce back from the absolute lows that we've experienced just a couple of days ago. Here at 60,000, now we are 7,500 above this. That is obviously a little bit better, but we might not be out of the woods yet. So this is what we are going to talk about. But before we are going to talk about levels and some comparisons to the other years, I want to quickly go into the narrative that plays out right now, and that is bearish again, right? And for that, I pulled up today the Bitcoin is Dead website, and I recommend to you that you're also looking at that, and you can always see how the Bitcoin is dead narrative intensifies on the downswings, and you can read selected but official posts and also posts with like credibility. So it's not, if I post Bitcoin is dead, it will not show up here. But if someone else posts Bitcoin is dead that has credibility in the space, like an author or someone who has many followers, then that will show up here. And our latest example is here from February the 5th. Bitcoin has a floor price of 0 from Buck Sexton, who is a talk show host, and he says, "Every time I ask a Bitcoin true believer to explain why they think it has any long-term value beyond the ability to convince someone else to give them more than they paid for it, I come away more certain that Bitcoin has no long-term value and a floor price of 0, right? So these things are happening, and actually we see our current price as a green dot here. So this was said at a price of $63,000. So this is convenient, right? But we can obviously look at other examples. Oh, here, by the way, this is from a little bit closer to now, February the 11th. Gold outperformed by 65% in 2025. Bitcoin declined by 6.5%. Bitcoin is no longer digital gold. This is from a strategist from the German bank, Deutsche Bank. So just from here, right, interesting. We have February the 9th, the 126K all-time high may have been the final all-time high. Despite unprecedented support from media, Wall Street, and government, Bitcoin is trading now below 69,000 all-time high. It first hit November 2021. At no point in its 16-year history did Bitcoin ever trade below a prior all-time high 4 years later. This is from Peter Schiff, and this is just wrong, right? Because here is Bitcoin trading at 15,500, and here is the prior all-time high at 19,893, so almost 20,000. Bitcoin trading roughly $5,000 below the all-time high of that cycle. So whatever this guy has smoked, it's just wrong, right? And we have a lot of examples here, right? I mean, to be fair, Bitcoin has also been called dead up here, and these guys probably made money. So Bitcoin will collapse between 7 to 11 years from now. That was close to the all-time high, and that was the founder and CIO, Cyber Capital. As the security budget shrinks, then the network will be attacked. Core then have to increase inflation by 21 million, splitting the chain, blah, 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 right? We can go back all the way here to somewhere in the bear markets of at $9,000, right? They come to an end. That was Warren Buffett. Joe Davis says there is a decent probability Bitcoin goes to zero. That was at 7,983. So we see how the narrative repeats all the time. With the con that's Bitcoin, there is whatever, right? Bitcoin is useless as a payment mechanism and ridiculous as a store of value. That was posted by Bill Harris, former CEO of PayPal. $6,270 worth of Bitcoin. Bitcoin will continue to fall because there is no value there. 10 years of smoke and mirrors is not, says Karen Webster, emerging payments writer. Now Bitcoin is trading at a bottom 10 times higher than at this price, and still, let's ask her, right? It's like the guy with, I'm alive but dead inside, right? Oh, by the way, this is also good. Bitcoin just failed the coronavirus test. From Dan Kapling, a state attorney and financial planner. So I hope he will never plan my finances, because he set that at $5,000, and just not even a year after, Bitcoin is just somewhere more than 10x higher. But that just as a couple of examples here. What is interesting, though, is that we are coming closer to a solution why Bitcoin crashed here in 1010 at 1010, right? The infamous turning point of Bitcoin, where everyone estimated Bitcoin should have gone much higher. So here is an article from Bull Theory about crash market and make billions, right? So this article, I will not read everything of it, but this article explains, and this is evidence, right? How the Jane Street Group manipulated the Indian stock market options to make a massive amount of money. So basically, Jane Street has been buying aggressively bank Nifty component stocks and futures, then place their orders, and basically they just manipulated the market with like hundreds of millions and made money from it, right? And all between like 9 a.m. to 11 a.m. in the morning. So the same thing. So and then in the afternoon they made their massive profits, right? On the options. Let's go directly to the Bitcoin part, because I think the Indian part is just somewhat not graspable because of the Indian currency, and not everyone is with a mind in that. So we have the 10 a.m. manipulation playbook here. Now Bitcoin, for months, repeated sell pressure appeared around 10 a.m. Eastern time. This time window is important. US markets open, liquidity increases, large orders can be executed efficiently, and the derivatives market are active. These components are all necessary. You need extremely high liquidity for this, and you need the derivative market. So observe pattern: sudden downturn move, liquidation of leveraged long positions, cascading forced selling, and later stabilization. We have covered this liquidating long positions all the time, right? On this channel, we've seen the liquidation heat map, but we didn't know that what exactly happened. But here you see it, right? 10 a.m. dump, 10 a.m. dump, 10 a.m. dump, another 10 a.m. and so on, right? So it's so here is Jane Street gets sued, and then no 10 a.m. dump, no 10 a.m. dump anymore happening, right? So crypto markets are highly leveraged. 2 to 3% drop is enough to wipe out large amounts of long exposure. When liquidation engines activate, exchanges auto-sell collateral, market orders hit the book, price drops further, and more liquidations are triggered. If a large trading firm sells aggressively into this window, it can initiate the first move. Liquidations amplify. The cascade does part of the work. After forced selling clears, price often rebounds. And I think that was also the reason why they chose the Indian market, because they're like is one of the markets with the highest option trading. So the similarity to India here, in India, the index was moved to influence option payout. In crypto, spot movement can influence derivative liquidation and future positioning. The underlying move is the trigger. The derivatives are the profit engine. So Jane Street, in turn, in the market, in the direct spot market, makes a loss, but in the derivatives, they are making massive profit. And that is market manipulation, right? One more detail matters. After the Terraform lawsuit was filed on February 23rd, 2026, the 10 a.m. pattern stopped. Instead of a sell-off, Bitcoin rallied. Shorts were liquidated instead of longs when a repeated mechanical pattern disappeared exactly when legal pressure appears. Market participants take notice. So interesting, right? And that might be an argument to say, could the bottom be in because of that, right? Could the Bitcoin bottom be in because of that? So, was the lunar collapse used to force a discount? In May 2022, Terra's UST stablecoin collapsed, right? You guys were here. We were here. We made videos about this. From 40 billion ecosystem to zero within days. The peg broke, panic accelerated, and Bitcoin reserves meant to defend the system were deployed under extreme stress. Beyond the peg break itself, there is another structural possibility raised by the lawsuit. Terraform Labs was using Bitcoin reserves to defend UST's peg. If UST destabilized, those reserves would have to be deployed immediately. That means selling or pledging Bitcoin under urgent conditions. Urgent conditions remove bargain power. So the lawsuit alleges now against Jane Street that Jane Street knew liquidity in the curve pool had been reduced. An 85 million UST sale was executed into the thinner liquidity. And this is exactly what we speculated at the time as well, right? We said they were attacked. No one knew by whom. Now we know. The peg destabilized rapidly. During the crisis, Jane Street was in direct contact with Do Kwon, the founder and CEO of Terraform Labs that had the Terra Luna operation in it, and that is now in prison because of it, right? Discussions reportedly included buying Bitcoin at heavy discounts, potentially 200 to 500 million. If Terraform was forced to defend the peg, they would have had to mobilize BTC quickly. If someone knew that pressure was coming, increasing stress on UST would accelerate that moment. More pressure on the peg means faster reserve deployment, weaker negotiation position, discounted BTC access. So, the possibility raised is simple. Was the collapse merely a trading event, or was it used to leverage, acquire BTC reserves, distress price? Now, that is not the only part. I found another part to the story. And this is here, right? So think about, okay, Terraform Labs attacked. They manipulate the market, they make money on the market, they absorb Bitcoin cheaper, one part, right? What if Jane Street intentionally crashed Luna and UST was different, okay? So here's the next theory. In April 2021, FTX bought 8% stake in Anthropic for $500 million. FTX was already funneling the customers' money to its sister firm Alameda Research. Given that FTX founder Sam Bankman-Fried worked at Jane Street, also prison, right? Worked at Jane Street for 3 years. This is interesting, right? So Sam Bankman-Fried works at Jane Street for 3 years. Jane Street might have known about this thing. Now the constellation, just quickly in the price. Terra Luna collapses. The market cascades out of control. 3 Arrows Capital, Celsius, Voyager, blah, blah, blah. FTX, right? So this whole downturn, these guys were connected as per this here, right? So FTX founder Sam Bankman-Fried worked at Jane Street, and then they were in contact with Do Kwon, and they were in the same market, and they knew about UST weakness. So Jane Street might have known about this. In May 2022, Luna and UST collapsed, and Jane Street was behind it. We just heard about that part. This collapse led to a massive $12 billion loss for Alameda Research, which caused the FTX collapse. 1.5 years later, FTX sold its Anthropic stake at 18 billion valuation. And guess who is the second largest buyer of this? Jane Street. Okay. So Jane Street bought $100 million in Anthropic from the collapsed FTX at 18 billion, which is worth so these 100 million are worth 2.1 billion now, a 21x return in just 2 years. Okay. Not only that, Jane Street head of quantitative research Craig Falls also proposed to personally buy 20 million worth of those shares. If we don't know, or at least we can't see right now, if he got them or not. But if he did, he would have made, like, out of 20 million in 2 years, 400 million on this thing. So Jane Street literally brought the entire crypto market down and made billions in profit, right? And we don't even know about the Bitcoin part, right? Crazy stuff. Absolutely crazy stuff. If we connect this all, then these players made this potentially from up here and maybe made this crash, Jane Street, here potentially capping 2 Bitcoin rallies, right? Potentially capping 2 Bitcoin rallies. Now, if we look at that in the Power of Law chart, that would explain why this shit looks like this and not like here, here, and here, right? Reaching up to the upper band. Did we just, or will this lawsuit flush out this type of massive player, and could this lead to the next run after bottoming out? First of all, have we bottomed out? Because I don't know, right? Probably not, right? Probably there are more players in the market that are playing this out like this. But could this lead to this massive price manipulation not happening in the market anymore, right? And what happens if they are convicted? Well, a quick shout out to all the rare hodlers here. We have some in the chat. Trucking Hank, good morning to you. Christopher Bodo, also good morning all. Good morning to you as well. Good to have you here, guys. Make sure to smash up the like button if you like the information provided here in this live stream. Also Tito, good morning, gentlemen, and Bernard Donaldson, happy Friday. PH, being patient hodlers has never been so true. Hope you're well and enjoying married life. Absolutely, I do. Very happy, and you are absolutely right. Being patient will pay off in the end. We know that we are at decisive points here, right? I mean, we see it here, moving average. We've just hit it, so I think these are, in fact, good levels to DCA, and that, of course, might pay off again very, very well. Now, I think that that not everything of this is obviously Jane Street, because it's also a pattern, right? But maybe some of it is Jane Street. Like, for example, that we didn't find our bottom here at 20,000, and maybe we will get another flush out here, so that we will find our bottom of crypto or of Bitcoin somewhere where these lines converge, right? We have this massive upwards trend line right now sitting at 55,000-ish, right? This is the point, sitting at 55,000 as the absolute support level, I would say, converging in May with the moving average if the trajectory stays like this. So I would say this here is a really a high potential bottom point where I would go very, very heavy with my buys. The same is supported by the power of law. You see it here, right? Zooming in, we see it also here. Funnily enough, the bottom of power of law is at 53,341 right now. So we don't expect prices to go any lower than that here in this bear market. So we are very close. We are 10,000 away from absolute rock bottom. And of course, if we are looking here, we have hit and then wiggled at rock bottom. Isn't that interesting, right? Everyone said, oh, that last drop was out of the ordinary because it passed these moving averages that had acted as support. Well, here we see that's actually absolutely in line with the power of law support band, just hovering around it. And then this was the bottom, of course, this exact day here, the 21st 11/2022, because then afterwards this is just upward sloping. So the moment that we hit this band, then of course we can start calling the bottom, and then also we can take this for accumulating the bottom. There's not a guarantee to hit this band, neither is a guarantee to hit the upper band, but as we speak, the linear regression fit, the fair value band, the green line, has crossed today 150,000. So that means we should expect that the next bull market leads us beyond the 150,000 mark, of course, more towards the 200,000 mark. And by the end of this year, we will be with a fair valuation at 200,000, and the bottom, the absolute rock bottom, being above our current levels. So that means that already DCA now should result, even in a rock bottom scenario, in profits by the end of the year, right? So here we go. End of the year is, can you see this? That is here, right? With a fair valuation of 199,000 and 70,616 as the bottom. Interesting. Let's see how it plays out. But yeah, let's go to our next topic, the AI layoffs. And here we have Jack Dorsey, by the way, saying no state is the best state, as his opinion. That sounds like a libertarian to me, or an anarchist, who knows, right? Now, he is saying we are making blocks. So here, blocks, building blocks, Square, Cash App, Spiral BTC, BitKey, and blah, blah, right? They make it smaller today. Here's my note to the company. Today, we are making one of the hardest decisions in history of our company. We're reducing our organization by nearly half, from over 10,000 people to just under 6,000. That means over 4,000 of you are being asked to leave or entering into consultation. I'll be straight about what's happening and why, and what it means for everyone. First off, if you are one of the people affected, you'll receive your salary for 20 weeks plus 1 week per year of tenure. Isn't it funny that everything that happens leads up to 21? Are we living in a simulation? Super weird, yeah, while reading through all of this. But everything leads up to 21 per year of tenure. Equity vested through the end of May, 6 months of healthcare, your corporate devices, and $5,000 to put toward whatever you need to help you in this transition. If you're outside the US, you'll receive similar support, but exact details are going to vary based on location, on local requirements. I want you to know that before anything else, everyone will be notified today whether you're being asked to leave, entering consultation, or are asked to stay, because some people obviously say we're not making this decision because we are in trouble. Our business is strong. Gross profit continues to grow. We continue to serve more and more customers, and profitability is improving. But something has changed. We are already seeing that the intelligence tools we are creating and using, paired with smaller and flatter teams, are enabling a new way of working, which fundamentally changes what it means to build and run a company, and that's accelerating rapidly. I had two options: cut gradually over months or years as this shift plays out, or be honest about where we are and act on it now. I choose the latter. Repeated rounds of cuts are destructive to morale, to focus, and to the trust that customers and shareholders place in our ability to lead. I'd rather take the hard, clear action now and build from a positive. We believe in manage a slow reduction of people, blah, 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 right? So a decision at the scale carries risk, but so does standing still. We've done a full review to determine roles and people we require to reliably grow the business from here, and we've pressure tested these decisions from multiple angles. I accept that we may have gotten some of them wrong, and we've built flexibility. We're not going to just disappear people from Slack and email and pretend they were never there, communication, blah, blah. So he... I want to emphasize what this is, right? Because he mentions it gradually here or barely here. This is an AI layoff, right? So what happens here is he says it in two parts, right? Our intelligence tools, where was it? Up here. Yeah, our business is strong. So he says our business is strong. Gross profit continues to grow. They serve more people. At the same time, the intelligence tools they are creating and using, paired with smaller and flatter teams, are enabling a new way of working, which fundamentally changes what it means to build and run a company. So this is basically what's going to happen in many of those companies, that they can just manage the same with less people because they use AI. That's basically like he basically says we're growing using AI, but because of AI, we don't need 4,000 people. That's just 40% reduction in and the share. The share just jumped up 25%, right? Because they're going to save so much. They're going to reduce their bottom lines so heavily by this. It's unbelievable. Hey Walrus King, good to see you. Thank you very much for the comment. This is a development that we will see, and it is in its nature deflationary, because now blocks can use this freed up bottom line not only for profit and rewarding shareholders, but also they can use it to reinvest in their business and tools, but also to aggressively compete in price in the market, and that will force the competition to either lose market share to them or to do the same, which then leads to layoff cascade, AI layoff cascade, right? So there are certain things that can be done with AI where there's still people sitting and working at the keyboard. And I think this is what also scares the hell out of the market, because people are now, okay, you have layoffs in this productivity boom, in a softened market, in these current conditions in the US and everywhere else all around the world. I mean, it's not only US, we're just by coincidence looking at the US all the time. But I think what is the ticker of unrate? Is it unrate? Yeah, unemployment rate. Right? This is going to lead to the unemployment rate going up, right? We don't need the bull market support band here. We also don't need those guys. Yeah, this is the unemployment rate. And we see it coming up since its bottom of April 23. We are nowhere near like massive non-linear explosions in the unemployment rate, but we are coming up, right? We are coming up in this, and those layoffs, they will just accelerate. So what this will force, in my opinion, is when we have in May the new Fed chair in the US, potentially they have to ease conditions, and then we will see if those, let's say, the capital that the companies use will result in a new productivity boom where you out of these guys have to rehire people that learn to deal with AI, that learn to work with AI, right? So I think in like the upskilling stuff that you need to do today, like a while ago, people needed to do some upskilling to know how to work with a computer, an email. This like 30 years ago or so. How to use the internet, how to use a keyboard, a computer, keyboard typing, writing emails, stuff like that, right? Some people, like the old dinosaurs, they didn't know how to do that. They had to upskill to be able to come back into the market. I think that people that get laid off now, they need to upskill basically to work with AI so they can get rehired, right? And who doesn't, they will not find the same type of jobs, right? Which means we all have to deal with AI as much as we can so that we are not the ones that get laid off, right? And this is everyone. Like, if you're sitting here looking at me and my screen right now and think that you will not be affected, that my job is safe, think again. There are very little jobs that are not replaceable by either AI or a combination of AI and robotics. And I mean, this might be not today, tomorrow, next year, but think 5 or 10 years in this economic acceleration or in this innovation acceleration, everything's possible, right? Technically, there could be a patient hodler avatar that does the stream, right? I mean, even that is not replaceable, although I just like doing it, and potentially I will still do this even if it was possible for an avatar to do this. And then you guys are avatars as well, then avatars are watching other avatars. But in all seriousness, I mean, I don't know about you, and this is absolutely not health advice, nor financial advice and anything, but I tend to look up stuff instead of going somewhere to consult if it's not life-threatening or so, right? So let's say I have a minor skin rash. I can just take a photo and shoot it into AI and get at least some opinion based on the global data that is there, what that is, right? What it could be, and if I should go to a doctor or not. But imagine everyone does that, then all this foot traffic at the doctors where you're just checking stops, right? Because that thing just says, oh, that looks like dry skin, try applying to something like a skincare on it, and then after 1 or 2 days it's gone, and if it's not gone, then the people will still go to the doctor, but they don't go to the doctor straight away, right? So even doctors are affected by this in some way, right? The same is people optimizing their health, their nutrition, their sleep, blah blah. They get less sick, so they don't need the doctor. All of that is possible with AI. Like I am constantly talking to AI about everything, about investing, about finances, about AI as the future, about health, about sleep. I can measure my sleep or track my sleep with the watch and upload that sleep data into AI and get an evaluation, right? Is that a good REM and deep sleep? Can I optimize, right? People will start optimizing. Who is optimizing is more capable, and they learn how to deal with AI. So I think we all can do something here, right? And then there's obviously the coding part, right? If you're a coder, probably you should know about all these things like Claude AI and whatever, right? To use it, right? I think a person that uses it is still more valuable than just the system, right? But a person that doesn't, a coder that doesn't know how to use these to check his code or whatever, potentially will get replaced by someone who does, right? So you are not being only laid off, sometimes you're being replaced by a better version of you as a worker, right? And then, of course, there are a couple of jobs that will stay a long time physical. So if you are a caregiver, for example, in some way or form, then potentially you will not be introduced to this workforce. Maybe we will even stock up or increase this level of caregivers. Like everything that is around personal care, relationship, love, whatever, right? Probably will not be replaceable, because who wants to be, like, if I'm sick, I'd rather want to be treated by another human being than by a machine. So if I imagine being in a hospital and I only see robots and there are no people, I don't know if I would feel comfortable, right? I mean, a mixture out of that, okay, but or let's say a kid in daycare. It's like, and there are only robots. I don't know, man. I don't know. I like Grok. I also like Gemini. I'm trying. I'm also using ChatGPT, so it's more like I'm not sure yet which one I like the best, because there are different things that they are good at. But I tend to, like, my fear is that some of these are limited and put out false information based on political agendas. So I want to see what the results are between them, and I want to be able to get results from multiple, like from more than one of those. But yes, Grok is good. Grok is good, and I think Grok is evaluating or is improving fast. Yeah, so Bitcoin bottom signals, right? Third topic. Let's run through them because I don't have that much time anymore. The RSI is at very low levels, comparable to here, comparable to here, comparable to here, bottom area. In my opinion, that's a buy signal. The unrealized profit and loss ratio is near bottom. Okay, you see it here, near bottom. Right, here's we have it in every bear market. The red zone, we're not there yet. I think you can look this up on CoinGlass and just evaluate there. I'm not I'm not sure how. I think we need another drop to get into the zone, but for me that area already, like right now, is good enough, right? Then Bitcoin, basically supply and loss, right? So the orange is the Bitcoin supply and loss, the black is the Bitcoin price, and then the the axis here is the level. How many? It's like 10 million of Bitcoin are basically in loss at this level. Which also is, you see it here, like it's one of the highest levels ever recorded. We only had it 3 times passing this, and we are at it right now. If we get this final drop, the capitulation, we might have the same result where like we get close to 11 million in loss. Another bottom indicator. You see it here, it happens here, it happens here, it happens here, it happened here, right? So every time we have these major drawdowns, we get this. Nothing has changed in that regard, right? Probability of loss per holding period, Bitcoin, right? So if you're holding more than 3 years, your probability that you're still in a loss is 0.7%. For me, that's as good as it gets for an investment. If you're 5 years, there's 0.2% just because of these couple of weeks where Bitcoin price goes below prior all-time high, which we saw in the beginning Peter Schiff doesn't understand and got wrong, right? But it happens. And then if you are looking at the 10-year horizon, and obviously Bitcoin is only around for like 17 years or so, then we have a 0%. But it will still be a 0% on a 10-year frame in the next years, right? Of course, right? And then we will see. But I think it stays at 0, right? I think this is going, these probabilities of loss, they're just drastically decreasing, right? Because of this cycle. Yeah, those are, in my opinion, big bottom signals. And then also what I would say is the cycle for Bitcoin has been mostly intact, right? Even though that we said the 4-year cycle is over on this channel, and I still say it is, because the 4-year monetary cycle outside of Bitcoin broke, right? The altcoin cycle broke, the NFT cycle broke, all of that basically broke, and also these blow-off tops and so on, they're not happening, right? I mean, there is some shift observable, but also, given what we've seen right now, we don't know how it will develop, right? We have seen Jane Street stuff, we've seen AI stuff, and so on. But what I would say is that if we go 4 years back in time, we are looking at May, like we are looking at February to March. We were only here, right, 4 years ago. So we sure as hell hope that this drawdown is not only this, right? I mean, of course, we can get a counter trend rally and then drop into our bear market, and we curve out a little bit slower there. But I mean, this is the February 4 years ago in 2022. Sorry, we need 2022, right? That is where we need to be. Exactly, and we bottomed then in November 2022, right? And then 4 years before that, 2018, we were here in February. End of February, that's here, right? So we can drop lower than this for sure, right? I mean, if we mark this this place where the bottom then happens, that was 26th of November, right? Right at this trend line. Oops, that was the trend line. I want another of these things. It's difficult to grab this. There we go. And then we are at 4 years later at the 14th of November here. Right? So right now, we are at February, end of February, and I mean, this is a little bit scary, right? But still. And then we go to October, September, November, right? I mean, this could happen. It's not out of the ordinary. The only thing that I don't like about this is if we were going to a level much lower, then we will significantly break this upwards trend line. Then we'll have a trend break. Yeah. But technically, the center of this dot, yeah, would be 46,000. Let's just say we have a much flatter bottom. If it was in line with this trend line, then the bottom would be 65,000 and we would go sideways until November. I mean, what the heck? And then just wicks down? I don't know. Yeah. But let's just assume that we're bottoming out in November again, and that's somewhere here between the 16th and the 20th, right? I mean, that would be if we were just to repeat everything. And then here we see it also, right? Maybe let's mark this in a different color. Sorry, do we have a date? Is a price label, a call out? We could use it, or maybe a needle. Yeah, the needle says December top, 2017, right? Right, and then here we have November top 2021, but close to December, right? So it's basically November, December. Yeah, here I wrote this wrong. It needs to be correctly here, north, so it's not too long. North top, and then we have what is this? We have an October top. 25 October 25. So we have December, November, October top. So could we be a little further progressed also in what comes afterwards? Question mark, right? So are we already where we were here in April? And that would be my thesis, right? Because the top happened late here, and then it happened here in November, so it moved 1 month to the front, the top, right? So here we have an October top. So we are technically 2 months before this, but here we bottom December, we bottom November. So should we say we bottom October because of that, right? Maybe, yeah. So that would be interesting. Macro style. That also means that we technically have 7 months to accumulate, and that we cannot expect, besides actually less than 7 months, because if there is a relief rally like here, then potentially we might not accumulate in that, but then we can just pile up the cash and go again once things are crashing down, right? So what is happening is here we see on the, so here's February, right? And then March. So we are coming into this phase, and here we saw that we had a relief rally in February and then drawdown in March and then a relief rally in April, right? So we don't see anything of that here. Here we had just here we also had it, right? We had a February sell-off, a relief rally in March, and then in April a sell-off. So the inverted of that. And right now we had only one relief sideways action last year, and this year we are only down. So we are still waiting for that relief rally. Yeah, so that's it. That's it for today, guys. Make sure to smash up the like button, subscribe to the channel, notifications on, and wherever you are on the world, have this great morning, evening, day, night, or afternoon. I hope you enjoyed this content. Stay strong, stay patient, and have a good one, everyone, and bye.